Many people are looking to live off passive income free of monetary problems. If this sounds like you, then you definitely need to understand this topic of dividend investing versus income investing.
I fight to live, I fight to strive. One day I'll have what I want in life.
Hello, my name is Exo and welcome to the channel where we cover all things personal finance, including this video, income investing versus dividend investing. If you enjoy the content and get value out of this video, consider subscribing and hitting that notification bell so you never miss out on any future content. Now, to understand this topic better, you need to understand dividend yields. Now, a dividend yield is given as a percentage and it represents how much dividend income you will get versus how much money you need to invest. The higher the dividend yield, the higher the dividend per share will be relative to the share price. Okay, so now we'll represent the dividend yield by looking at Apple stock as opposed to AT&T stock. Okay, so here we can see Apple stock and we can see it has a dividend yield of 0.7%. Now when you plug this into a calculator, we've got 0.7 here, everything else has been left as standard, so it'll be a fair comparison. So you can see with this company, after 20 years, your dividend income would be 5,000. Whereas you oppose this to a company like AT&T, where AT&T has a dividend yield of 7.34%, so when you plug this into the calculator, and now you can see the annual contributions are quite substantial after 20 years. Now obviously this was not entirely accurate, as you'll have the growth of Apple which AT&T wouldn't have, but this just gets you the understanding of how dividend yields work. So now we know that the higher the dividend yield, the more money you'll get in passive income. This must then mean that the income strategy is best. Well, not necessarily, and again I go back to my favourite word, perspective. And that is the beauty and is why it's called personal finance. It is individual. There is no right or wrong answers. Only you will know what is best for you, and only you can make that decision at the end of the day. But whatever your perspective, everybody loves free shares, so make sure to go down in the description, click the link for trading 2 on 2 and get a free share worth all the way up to £100 when you deposit £1 on that platform. The income strategy is good for people who want to retire as soon as possible and live off that passive income. Now there is a misconception with high yields that they are more dangerous, that the company is expending all its earnings to pay off dividends and that it could die any time. Now, in some cases, yes, this is true, but not in all cases. As long as you do your in-depth analysis, all your research and due diligence, then having a high yield company is no more dangerous than owning Apple. I'd recommend watching Dividend Bull for anything income investor related, as he is very knowledgeable and that's his entire YouTube channel is evolved around high dividend yields. Investing in general is really not as black as white as people try and make it to be. There are so many options, so many avenues, and no one can tell you what the right answer is. It is up to you to find out for yourself. Once you choose what type of investor you want to be, then people can help you narrow it down into good stocks. Like my stock analysis videos might help, but in terms of anything else, no one can really help you choose what you want. So just sit down, have a brainstorm, write things down, whatever helps you figure out what you want, and then you can go from there. And the other thing, you don't even have to be full dividend investor or full income investor, you can mix and match. If you find a great growth company, for example, undervalued, then go for it. If you like it, go for it. There is nothing stopping you from mixing between everything. It is only down to you if you want to be a full-on dividend investor, full-on income investor, or full-on growth investor. The options are there for you. So in conclusion, the higher the dividend yield, the more money you'll get and the quicker you can retire off that passive income. Secondly, income investing is not dangerous inherently. You just need to do your analysis and a bit more research to make sure that the cash flow and balance sheet can support it. Some sectors and some companies just have stupid amount of cash flow and they are better off paying out dividends. And finally, it all comes down to perspective. Again, only you will know what option is correct for you. If you want to go down to ETFs, do ETFs. Growth, do growth. Mix and match, do that. No one's going to be able to tell you this, and anyone who claims they can is lying to you and should not be trusted. This is an individual thing. It's what is called personal finance. It's not called group finance. You are responsible for your own finances. Each strategy has positives and negatives around it, so that's why you just need to do your research. I have topics discussing growth, dividend, and which one will suit different people, so that video might help you decide. I'll leave a link on screen now. So I hope you get some value out of this video on dividend investing versus income investing. If you did, I'd really appreciate it if you liked and subscribed to the video. It's completely free, it only takes a fraction of a second, and as a reward, here is a cute picture of a seal. And I'll catch you in a bit. Peace out.